Hey everybody, Smart Silver Stacker here. What a crazy couple of days we've had in markets this week. We saw the Russian invasion of Ukraine kick off, we saw stocks tank, we saw stocks recover, gold, silver, and oil had big moves up on the news, and now they've come crashing back down. There's a ton of volatility in markets right now, and I'm sure the situation has left a lot of investors shaking their heads. But all of this volatility, all of this uncertainty, it's telling us something important, and that's what I'm going to be talking about in this video. I know a lot of you watching probably saw that big move up in precious metals and thought, hey, this is it, this is the big one. But clearly that was not the case. However, I'm just as bullish on silver as ever, but I do think there is one thing that has to happen before gold and silver can really take off. And I'm going to be getting into that as well. So stick around and let's get to it. So what is all of this market volatility telling us? I think it's a warning. It shows that the stock market, and also the crypto market for that matter, are poised for a calamitous decline in the face of bad news. When we first heard the news that Russia had begun its invasion, Dow futures dropped 900 points. Bitcoin was also down almost 9% on the lows, which I do think shows that Bitcoin is not the safe haven it's been touted as, but instead trades in tandem with risk assets like US growth stocks. The big beneficiaries of the bad news were gold, silver, and oil. WTI crude and Brent crude both got over $100. Gold was knocking on the door of $2,000, didn't quite get over that level, but it came very close, trading as high as $1,975. Silver too moved up significantly, getting as high as $25.57. Compare that to where we're at now, just a day later. Both oil contracts are back down under $100, gold is under $1,900, and silver is back in the $23 range. Stocks across the board are also back in the green, having recovered all of the losses that they accrued on that bad news of conflict breaking out. So what accounts for this miraculous reversal? Well, one thing that seemed to help a lot was Joe Biden's statement that no US troops would be deployed into Ukraine, and we would not be getting directly involved in the conflict. At the same time, Biden announced a basket of sanctions aimed at crippling the Russian military and economy. The market certainly seemed to like this news, as evidenced by the recovery we've seen so far. How effective those sanctions will be seems kind of dubious to me. I suspect that your average Russian is probably a lot more willing and able to deal with economic privation than your average American might expect. You know, they've had some hard times over there, so it's really nothing new for them. I am certainly glad on a personal level to hear that no US troops will be engaged in the fighting in Ukraine. I don't feel that Ukraine's independence is worth the lives of American soldiers, and I know some of you watching probably have a different opinion on that. I think the majority of Americans probably share my views, but if you think differently and you want to make a case for American involvement in Ukraine, let me know in the comments below. And I know I'm kind of digressing from the main theme of this video, but I do want to share one story I saw that I thought was just crazy. Props to the Biden administration for not sending our soldiers into Ukraine, but one thing the administration is doing that I think is just absolutely nuts is that they're trying to divert customs and border protection officers from the southern US border to Poland to help process US citizens fleeing from Ukraine. This is from a CBP departmental memo obtained by Just the News, linked down in the description. The Office of Field Operations is seeking volunteers to assist with the possible evacuation of US citizens, lawful permanent residents, and their immediate family members from Ukraine. Eligible employees who volunteer for this situation may be selected to serve a temporary assignment in Poland to facilitate travelers for entry into the US, to include providing guidance and problems resolution to other government agencies. And I just want to say that to me this seems nuts. We have an ongoing crisis at the southern border, the CBP is already understaffed to deal with everything going on down there, and the Biden administration wants to deplete their personnel further to help on the Ukraine-Poland border. And I do feel for US citizens who are fleeing Ukraine. I hope they all make it out safe and sound. You know, I hope as few people get harmed as possible in this conflict regardless of their nationality, but the idea that somehow events in Europe are a higher priority than the actual physical security of our southern border is crazy to me. And that's just my 2 cents. Again, if you disagree, let me know in the comments down below. And returning to the recovery we've seen in risk assets like stocks and Bitcoin, I don't think that Biden's statement was the only catalyst for the bounce back. I think that one thing affecting the recovery is that sentiment regarding the Fed's tightening in the upcoming FOMC meeting has changed. A lot of investors, I think that they see the big drop in assets, they see the invasion, and they think that the Fed now is not as likely to tighten at the upcoming meeting in March. And I think there's probably something to that. At the last Fed meeting, we were almost guaranteed an increase in the federal funds rate in March. Now, to me, it's very odd that the Fed postponed raising rates at the last meeting, especially after hearing Jerome Powell speak, because according to him, the economy is strong, the recovery is going great, things have never been better. And you combine that with the fact that at the last meeting, year-over-year inflation numbers, according to the CPI, were already at 7%. And yet, Powell and the Federal Open Market Committee declined to raise rates. To me, I'm just looking at this and saying, what are you waiting for? If everything in the economy is so great, it should be able to tolerate a 25 basis point increase in rates. And by the way, I think this term basis points that the Fed always uses is kind of funny. They don't want to talk about raising rates 0.25% because that sounds like you're not doing very much. But when you say 25 basis points, well, hey, it's 25 of them, so that sounds like a big increase, right? And of course, a 25 basis point increase in rates is practically nothing. I mean, from month to month, we're seeing inflation move up by 50 basis points. So if you're taking 2 or 3 months just to raise interest rates by 25 basis points, how do you expect to get ahead of inflation? But the real reason the Fed has been dragging its feet on raising rates is because the economy is not great. That big drop in stocks and risk assets we saw the other night is a huge flashing warning that things are not great. The economy and the stock market are actually very fragile. And that's why with this new development of ongoing warfare in Ukraine, I would not be surprised if the Fed's tone in March is more dovish than at the last meeting. This war is actually a huge boon to the Fed because it's the perfect excuse to not raise rates. And who knows, maybe the Fed will still raise interest rates. It's still possible, I suppose. If we don't get any further market shocks between now and the FOMC meeting, it could still happen. But one thing we won't see, I would almost guarantee, is a 50 basis point increase in the federal funds rate. There's been a lot of talk and rumors that the Fed might go for 50 basis points in March, but to me now that's probably off the table entirely. It's possible that we may see 25 basis points, but if we do get another market shock before the March FOMC meeting, I expect the Fed will kick the can down the road further and delay raising rates yet again. And that leads me into the one thing that really must happen before gold and silver can take off and move much higher. And that is, the Fed is going to have to reverse course. We've had ultra loose monetary policy for the past 2 years. Vast amounts of fiat currency have been printed, debt levels across the board have skyrocketed, inflation is getting out of control, the system is rife with malinvestment and bad debt that is being supported by these ultra low interest rates. What we really need is a recession. We need inefficient businesses to fail, close their doors. We need employees who are producing nothing to be laid off so that they can find more productive outlets for their labor. And we need bad debts that can never be repaid to be defaulted on. That's the cure for what ails our economy. But the Fed is not going to let that happen. For months now, the Fed has been talking about raising rates. They haven't done it yet, of course, but there has been a huge buildup. They've assured the American public that they have the tools necessary to get inflation under control and that they will get prices back down to manageable levels. But the next shock to the system, the next black swan, the next needle that pops these massive asset bubbles, that's when all the hawkish talk from the Fed is going to end. The entire economic recovery that the Fed and our politicians have been touting for the past 2 years is completely based on elevated asset prices. It's the wealth effect. People's paper assets go up in nominal value and now everyone is rich. Ah, the magic of central banking. But if you're basing your entire thesis of economic recovery on higher asset prices, what's the Fed gonna do when the bubbles they've inflated get pricked? They're gonna print. They're going to print and print and print using the only real tools in their toolbox. And they're going to try as hard as they can to reinflate those bubbles. And this is what they've already done every time we've had a crisis for the past 2 decades. The problem is, each time you pull this trick, you have to print a lot more than the time before. And the last time the Fed did this, in 2020, they printed a lot. So the next time the Fed opens the floodgates of liquidity, it's going to be on an absolutely epic scale. And when that happens, the bottom is going to fall out of the dollar. It's going to become clear that the Fed has no intention and no ability to get inflation under control. Politicians will bemoan the situation, they'll blame each other, they'll find scapegoats, But secretly, they'll be happy for the opportunity to begin paying and servicing the massive $30 trillion national debt and the $164 trillion in unfunded liabilities that the US government has accrued in devalued fiat dollars, because that's the only way you can pay debts and obligations of that magnitude. You sure cannot tax that much. There's not enough wealth out there. It's like Alan Greenspan said.
And we can guarantee cash benefits as far out and at whatever size you like, but we cannot guarantee their purchasing power.
If you're getting some value from this video so far, please do give it a big thumbs up down below, and why not subscribe to the channel so you don't miss out on more videos just like this one. So speaking of that next black swan moment, here's an unsettling headline that came out following the Russian invasion of Ukraine. Biden has been presented with options for massive cyber attacks against Russia. This is from the article. 2 U.S. intelligence officials, 1 Western intelligence official, and another person briefed on the matter say no final decisions have been made, but they say U.S. intelligence and military cyber warriors are proposing the use of American cyber weapons on a scale never before contemplated. Among the options, disrupting internet connectivity across Russia, shutting off electric power, and tampering with railroad switches to hamper Russia's ability to resupply its forces, 3 of the sources said. You could do everything from slow the trains down to have them fall off the tracks, one person briefed on the matter said. Okay, and the fact that the military is considering this type of escalation is of some concern. Launching our own cyber attacks against Russia is all well and good, but what about when they retaliate? The US is extremely vulnerable to cyber attack, and this is one area that countries like Russia and China have put a tremendous amount of resources into, so who knows what their capabilities are in regard to harming US infrastructure. I'm sure we possess significant offensive capability in cyber warfare as well, but is using it to save Ukraine really worth the risk of this type of escalation? You might recall the Colonial Pipeline cyber attack that occurred in May of 2021. A rogue hacker group shut down a main fuel pipeline carrying gasoline and jet fuel to the southeastern United States, and Colonial Pipeline was forced to pay a $4.5 million Bitcoin ransom to get fuel flowing again. Imagine if the hackers had been more malicious and not accepted a ransom. Or what if rather than merely disrupting fuel distribution, they triggered an accident or a fire or an explosion? And keep in mind, this was an isolated incident. We can barely deal with one cyber attack like this, let alone a concerted series of attacks across widespread targets. All I can say is that you probably want to have some physical, tangible hard money assets on hand like gold and silver, and probably some cash too, because in the event of a coordinated cyber attack, electronic wealth in bank accounts or even on blockchains may be completely inaccessible, or it may even go away for good. Another possible escalation against Russia that could come back to bite us is the possibility of denying them access to SWIFT. SWIFT stands for the Society for Worldwide Interbank Financial Telecommunication, and it's a cooperative society based in Belgium that facilitates financial transactions between banks worldwide. Yesterday, when Biden announced the package of sanctions he was implementing against Russia, he notably declined to exclude them from the SWIFT payment system. This was despite calls from other world leaders such as Boris Johnson to ban them immediately. Biden did, however, state that banning Russia from SWIFT was still an option on the table. Now, why should this be of concern? Well, take a look at SWIFT. This is a Western financial system created back in 1973. That's just 2 years after Nixon took us off the gold standard, 2 years after our purely fiat dollar world reserve system was put in place. What do you think will happen if we kick Russia from SWIFT? Sure, it'll cause some disruptions for the economy in the short term, but do you think they're just going to stop making payments? No, they'll probably team up with China to create their own international payment system, an alternative that now any nation that gets threatened with Western sanctions would be able to turn to. And that will just bring the world one step closer to de-dollarization, and bring us that much closer to the dollar losing its world reserve currency status, a path along which we are already well along our way. And this is exactly the type of economic development that could lead to a currency crisis in the dollar, and just one more reason to be stacking physical wealth in gold and silver bullion. So what do you guys think? What will it take to get gold and silver moving much higher? How do you see the conflict in Eastern Europe playing out? And what do you think the consequences could be? Let me know in the comments below. And if you want to see more videos about gold, silver, and the state of our economy, then check out these videos right here. Thanks everyone for watching. Don't forget to like, comment, and subscribe, and I'll catch you next time. Smart Silver Stacker, out.